Welcome to the Deep Dive. Here, we take what might seem like, a dense stack of info, like a corporate earnings report today,
Yeah.
and we just cut straight to the important stuff, the insights, the nuggets of knowledge. It's kind of your shortcut to being genuinely well-informed.
hmm
Today, we're diving into the second quarter 2025 earnings report from WM. You probably know them better as Waste Management, their old name.
Right.
And this isn't just about the financials, so we'll get into those. It's really a look at how this huge environmental solutions company is performing, how it's evolving, and critically investing in sustainability.
Yeah, that investment piece is huge for them now.
Exactly. So our mission today is to unpack WM's latest results, really understand their strategy, especially around sustainability and some of their newer business areas, and figure out what these numbers actually mean for them and maybe for the whole environmental solutions landscape. We want to connect the dots for you. Okay, so let's get into these top line numbers. The headlines, they're pretty strong. Robust income from operations growth. More than 33% increase in net cash provided by operating activities. Looking at just those big numbers for Q2, what immediately jumps out to you? What's the most significant thing?
What's interesting, the numbers themselves are strong, sure, but what's really fascinating is how they kind of back up what WM says they're trying to do. Their CEO, Jim Fish, he talked about building these distinctive platforms to drive differentiation and fuel long-term growth.
I create shareholder value.
Right, the standard CEO mission statement language. Yeah, but you actually see it here. Total revenue up 19%. That's huge. $6.43 billion compared to, what, $5.4 billion last year? And income from operations, double-digit growth there, too, up to $1.15 billion. So it's not just, making more money the old way. It really suggests they're making progress on transforming the business model, shifting things.
Transforming. So left traditional waste hauling, more diversified environmental services. Is that the idea?
Exactly. They're leveraging their existing infrastructure, their scale to move into these maybe higher margin, more specialized areas. It feels like a strategic shift in where the revenue comes from.
Okay, that makes sense. And speaking of new areas, this WM Healthcare Solutions, that seems like a really interesting move. It's pretty new for them, isn't it?
It is, relatively speaking, and it fits right into that diversification strategy we were just talking about. It's not just trash collection anymore. This is regulated medical waste, secure information destruction. They're even expanding it geographically into Canada and Western Europe.
Wow, okay. So how's it actually performing? Is it contributing meaningfully yet?
It is. In Q2, it added about $110 million to their adjusted operating EBITDA.
Adjusted EBITDA. Earnings before interest, taxes, depreciation, amortization. The core profitability measure.
Right. And that $110 million was pretty much exactly what they expected. So it's delivering right out of the gate, essentially.
110 million is definitely significant for a newer segment. What about integrating it? Acquisitions always talk about synergies, but actually getting them,
Yeah.
that can be tough.
Yeah, that's always the question. But the report sounds pretty positive. They say they're on track to hit the upper end of their target for this year, which was 80 to $100 million in synergies for 2025.
The upper end, okay.
Yeah. And maybe even more interesting, they've identified another $50 million in potential cross-selling.
Cross-selling, you mean selling their regular waste services to the new medical clients and vice versa?
Exactly, offering both solid waste and medical waste solutions to the same customers. And they say they've already secured $11 million of that annualized EBITDA from cross-selling. Plus, they're projecting total run rate synergies of $300 million by 2027.
300 million.
Yeah, it's ambitious, no doubt.
Yeah.
But it really shows the power of these strategic buys if you can execute well. It's not just the new revenue stream, it's leveraging those existing customer relationships and finding cost efficiencies. It's kind of like a blueprint for expansion.
That cross-selling piece is smart, really milking the value of each customer relationship. Okay, let's shift gears a bit. Beyond the financials, WM also put out their 2025 sustainability report. They talk a lot about investing in innovative environmental solutions. What specific things are they doing on the sustainability front that are actually, driving growth? Is it real or is it just good PR?
That's the million-dollar question, isn't it? The balancing profit and planet. But WM seems to be making pretty substantial strategic bets here, especially in recycling and renewable natural gas, or RNG. Just in this last quarter, they brought 3 big projects online. A new RNG plant in Illinois,
Okay.
a recycling automation project in Pennsylvania, and a whole new recycling facility out in Oregon. So these aren't small things. These are major capital investments.
Right. And how many of these do they have planned overall?
Well, these latest ones bring their RNG total to 8 completed out of 20 they have planned. And for the recycling automation and new facilities, they're now at 29, done out of 39 planned.
So they're making steady progress, and they mentioned emissions reductions too.
Yeah, the CEO highlighted a 22% cut in greenhouse gas emissions since 2021, which is, pretty significant.
Okay, tangible environmental progress.
Mm.
But are these green investments actually paying off financially? Are they adding to the bottom line?
They are, according to the report. Their recycling processing and sales business, combined with the WM renewable energy business, together added $36 million to adjusted operating EBITDA growth. And they directly attribute that growth to these sustainability projects.
36 million. Okay.
What's also interesting is the commodity pricing dynamic. The price they got for regular recycled stuff, single stream, was actually down about $82 a ton versus $96 last year.
Ouch.
Okay. But the average price they got for the natural gas they're producing from these RNG plants was way up. $2.81 per MMBtu. That's the energy unit, compared to just $1.64 last year.
Wow. Quite a jump in natural gas prices they captured.
Yeah, so it shows that shift is working, at least in this quarter's environment. It demonstrates that these big environmental projects, they aren't just about waste diversion. They can be real innovative energy production and advanced material recovery businesses that actually make money and help the environment.
Turning trash into, well, cash and cleaner energy. It's pretty compelling. Okay, let's circle back to operations for a second. You mentioned earlier they hit a best ever operating expense margin in their main collection and disposal business. How'd they pull that off? That sector's usually known for really tight margins.
Right. It's impressive. It's a great example of just relentless operational discipline paying off. Their adjusted operating expenses as a percentage of revenue, just for that core WM business, improved by 150 basis points.
1.5%. That's a big move in margins.
It really is. And it comes from a few places. They definitely benefited from higher landfill volumes, which helps margins. But they also were really focused on costs. Things like improving driver turnover, that's always a big cost, better safety performance, using routing technology more effectively.
For more logistics.
Exactly. And also strategically getting out of some lower margin residential collection contracts. Plus, making smart investments in their truck fleet. It's a combination of things.
So, trimming the less profitable stuff
Mm-hmm.
and optimizing the core through tech and efficiency.
Mm-hmm.
Did losing that residential contract hurt their overall volume much?
You'd think it might, but apparently not too much overall. Even with losing what they called a relatively large residential contract, their total collection and disposal volumes still grew by 1.6% compared to last year.
Huh. Mostly
Driven by strong growth in landfill volumes. So the core business itself, collection and disposal, hit a really strong adjusted margin of 37.9%. It just shows that core strength. It kind of highlights how these big players can find efficiencies, tweak their business mix, and still improve profitability even if market conditions shift or they lose a specific contract. It's about scale and smart management.
Really tightening the screws on the operations side. Okay, so putting this all together, strong financials, diversifying into healthcare, big sustainability investments paying off, better operational efficiency. What does this mean for the rest of 2025? They sound pretty confident about their full-year outlook.
They do sound very confident, and you can see why, based on these Q2 results, they basically reaffirmed their main profit guidance, that adjusted operating EBITDA number. They kept the midpoint the same at $7.550 billion, just narrowed the range a little bit.
Narrowing the range usually means they feel more certain, less risk.
Exactly. And maybe even more telling, they actually raised their free cash flow projection. They're now expecting between $2.8 billion and $2.9 billion for the year. That's up $125 million from what they originally guided.
$125 million more in free cash. Where did that come from?
Mostly from a tax policy change, actually. Something called bonus depreciation got restored to 100%.
Ah, the tax rules.
Yeah.
So companies can deduct more of their investments up front.
Basically, yeah. It lets them deduct the full cost of certain assets right away instead of spreading it out over years. That gives an immediate boost to their cash flow, makes a big difference on paper and in terms of cash available.
Okay, so a nice tailwind from tax policy boosting the cash flow. Are there any headwinds they mentioned? Anything tempering that confidence?
There are a couple of things, yeah. It's worth noting their total company revenue forecast is actually slightly down compared to what they thought before. Now looking at $25.275 billion to $25.475 billion.
Why the lower revenue expectation?
Two main reasons they cited. One is those lower recycled commodity prices we talked about. That hits their recycling brokerage business, which they
Right.
say is pretty low margin anyway. And the other was some lingering impact from harsh winter weather back in Q1, which apparently suppressed volumes a bit.
Okay, so commodity prices and a bit of weather impact dragging on the top-line revenue projection.
Right. But here's the key thing. Even with slightly lower revenue expected, their adjusted operating EBITDA margin forecast is actually higher for the full year.
Higher margins despite lower revenue. How does that work?
It comes back to those operational efficiencies and the strategic focus. They expect margins now between 29.6% and 29.9%, up from their previous guidance range. So it really shows that even if there are some pressures on revenue, like commodity prices they can't control, their cost discipline and focus on higher value services are boosting overall profitability. They're managing the business effectively.
That's impressive. It shows resilience. So for you listening, you can see how external things like tax changes or commodity prices directly hit the numbers, but also how strong operational management can offset some of that pressure. Okay, so let's wrap this up. Our deep dive into WM's Q2 report. It really paints a picture of a company firing on multiple cylinders, doesn't it?
Yeah, it really does. Strong financials, sure, but also this clear strategic direction.
Right, aggressive diversification into healthcare. These big, meaningful investments in sustainability like RNG and recycling tech that are actually contributing.
And that relentless focus on optimizing the core business, improving those margins.
They're not just growing, they're adapting, they're optimizing, and they seem to be fundamentally reshaping what it means to be an environmental solutions company.
It's definitely moved beyond just hauling trash.
Absolutely. Which leads to maybe a final thought to leave you with. As WM keeps expanding this definition of environmental solutions, using its massive scale for both profit and seemingly real sustainability gains, what new opportunities does that open up? And what new challenges might arise not just for WM, but for the whole industry? And maybe more broadly, how will these kinds of evolving corporate strategies continue to shape our communities, our infrastructure, and ultimately the planet?
Yeah, how far can this integration of business and environment go? It's definitely something worth watching.
For sure. Lots to think about there.